Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. About a week ago, maybe a little longer, I spoke about how I kind of used what the chart gave me to set targets for option flies. All right, so whether it's call flies or put flies, use like significant areas of resistance, support, uh, key moving averages. Right, basically like these technical levels are. I view them as my friend when I'm doing these flies because I'm really looking for price points that I feel are going to be uh, kind of like magnets, right? So whether it's resistance or support, I mean that kind of lines up well for flies, right? So if you didn't see that video, definitely check that out. Today, a little bit different, same overall strategy. So option flies, so whether it's call flies or put flies. But what I want to talk about is just briefly is expiration and kind of like profit taking or taking money off. All right. Now I have the spiders up here again, and one of the things that I talked about was the 50 day. So when we rolled over, I was talking about option flies and how I thought the 50 day would be relevant on the way higher, right? So obviously you can see that the spiders basically hit the 100 day perfectly, rallied up, and then initially, and actually, depending on if you want to consider this still chopping around, we're still like chopping around in the vicinity of this 50 day, right? So you can see how relevant these moving averages have been on like whether it's the spiders or the Qs. Now, when it comes down to trading flies, um, I I view them from a more speculative standpoint most of the time because just because of like the design of the strategy, in the sense that you really have to not nail the move, like the midpoint of the move, but you do have to have a reasonable expectation that a stock is going to move past a certain point, but not further, right? Or it's not going to go way too far, or it's not going to go drop way too much, because then it kind of nullifies the strategy, right? So one of the things that is always a complication with options is the time frame. Like when is it going to do it, right? And what I like to do, and this is not normal, but for like trades, I actually will sometimes err on the side of less time. So most of my swing trades, I try to err on the side of more time. So, like, if I think it could be a month, maybe I'll give myself 6 weeks. If I think it's going to be 6 weeks, maybe I'll give myself 2 months, right? Or just because I want to be sure that I don't run out of time. With flies, because time is almost like your enemy in the sense that once the stock starts to move, right? So, like when SPY started to move and got to the 50 day, then basically time is almost your enemy because you want it to evaporate a lot faster than it probably normally would be, right? Because you want the premium to get sucked out of the short contracts, especially if you lined up the midpoint of the fly right with the moving average, this 50 day, right? So again, that's why I say more speculative because I will oftentimes kind of like undercut the expected time frame that I think, or maybe not undercut, but just like kind of give it more aggressive time frame. So if I think it could take 2 weeks, then I might actually go with 2 weeks in terms of expiration. Or if I think it's gonna be like a month, then maybe like a month. And really the reason is because like I don't want all the excess time because that's really going to eat into like the profit window of that strategy, and I'm going to have to sit and let the time value erode to really get more of like a maxed out position, right? So uh, that's definitely one of the things that I try to do, is figure out what how much I really think that this is going to take to develop, and then get it as close to that as possible. Just because I don't want to have all that excess time and have to sit around, right? Now on the flip side of that, if I'm wrong, okay, and the fly moves and say like I when spiders rolled over, like hypothetically, I put on November 20th expiration call flies, thinking it could take maybe a little bit longer to bounce back up to the 50 day again, hypothetically. Then what I will do, instead of waiting around now for another month and trying to time this perfectly, right, and have it close smack at this 50-day, which to me seems kind of like a lower probability scenario, right? You gotta have to wait a month and have it close exactly at the 50-day, right? That seems like it's kind of a tough proposition. So what I will do is sometimes just take it off early, right? So instead of sitting, letting the time value erode, letting the premiums erode, I'll just take it off. It's not going to be anywhere near maxed out, and I most times I'm comfortable with that because I just don't have the desire to sit around and let it like just burn and hope that it remains range bound around this level, right? Because if it starts to blow through the top of the fly, then the trade is nullified, and if it rolls back down, then the trade's nullified. So you really need it to stay in this really fixed window. And if I have like another month or 3 weeks or 6 weeks, whatever it is, I mean, the odds of it staying range bound are probably lower, right? So I'll just take the small gain or whatever it is. Sometimes it's a small gain, sometimes a little bit more, but more often than not, I don't want to wait around. I can roll up to a different strategy. Maybe I could even put on like another call fly above it. But um, if it moves faster and it's right into like the midpoint of my fly, then more often than not, if I have a lot of time, I'll try to take it off quickly and just be happy with whatever small profit I get. All right, just because like I didn't line up the time frames right, and that's one of the downsides of the strategy. Okay. So again, definitely a little bit more complex trading strategies, flies, but they are definitely good tools to have in your chest. If you want to like try something different besides calls or puts or call spreads or calls or put spreads, definitely like good strategies to know, be familiar with. But again, there are nuances, just like anything else. All right. So if you like this video and you're looking for more information on options trading or more information on option flies or spreads, please follow up the link in the description of the video for more information on options to play. Hope you have a wonderful night. Stay well, and I will talk to you all tomorrow.